much preclinical data do you need to attract funding? Maybe Cedric, since you guys made a preclinical investment, you can address that.
Sure. Well, the earlier we would never go into a company unless they had some animal models at least, and hopefully understanding the mode of action is also critical. I concur with my colleague Emmett. We need to understand how the drug works, and then hopefully some kind of early talks. Doesn't have to be GLP, but early talks or maybe some early PK information. This is what we need, frankly, to go before that. Unless there's always exceptions. If it's a spectacular platform and it's something really new, that's something that we would look at. I'd just like to comment back on the issue of the innovation gap. I think across Western countries, the innovation gap is actually growing because what it takes to get a drug approved is getting to a certain extent tougher. The public markets are closed. Pharma companies can only acquire so many companies, and so therefore VCs need more money per company, which means therefore they'll do fewer companies if the fund size remains constant, which therefore means that they will tend to that companies that are at the early stage will have a lot of difficulty fundraising. So it is, I don't think this problem is there, unfortunately, to go away. Why unfortunately? Because as a physician, I'd love to see more novel things come out. But people have got to be creative. And I think getting grants, non-dilutive financing is the way to go. To wait as much as possible before you get venture capital. Because when venture capital goes into a company, then the clock starts ticking because we have to make a return, and our investors are asking us to make a return from the moment that we invest. So that's really the gating factor.
I would just like to add that, proof of principle is important for early stage investors, but there is a different model which seems to be working, certainly in Cambridge, anywhere where management's key, and so if you have serial entrepreneurs there, they may not even have proof of principle. I know one company that just started with a couple superstars in there, and I asked the person who I used to work with before, how were you able to raise $20 million in a Series A with just this concept? And he kind of laughed at me and said, yeah, all we have is some IP right now. And they were able to raise from 2 major VC groups. Of course, they have he's got a great track record from before. You could place a bet on somebody like that who didn't have the proof of principle, because that manager or that management could in fact be resourceful enough. They've done it before. The venture gap, there's a great book that's come out, if any of you guys are interested. I just picked it up myself. It's somebody who was kind of a mentor of mine in the VC game. Peter Brook at TA Associates Advent has just put a book out called Vision for Venture Capital. And in there, one of the things he talks about is that in the 80s, a lot of the venture firms were started with, the average size is like $50 million. And now the swing is you have 30 funds that are $1 billion plus, big ones. And where 250 is a small fund now. And so it takes the same effort, the same due diligence to invest $1 million as it does to put 10 million into it. And so a lot of those funds are staying away from the early stage opportunities, which makes it harder for guys like us to get syndication around it. And then when the larger guys come in, then they say thank you very much, and they just swamp it and take it from you. So there's this bimodal paradigm that's going on right now, just because of the way the market is right now. And you need both in there, but I would argue that innovation for the entrepreneurs, it's tough to get that funded, and you're seeing blended firms coming out now. There's a firm called Allied Minds, and there are firms like this now that are using a very different model where they're going in to play venture gap investing right now, and they'll take things, and I know these guys are taking things out of Harvard Medical School, for instance, early on, and then they're incubating them as part of their nest before they release it with some value adds to it. So you're getting some interesting models in the venture paradigm right now.
Yeah, go ahead.
I just wanted to add that there's also a second gap that's now emerged that we didn't used to talk so much about, and that's the commercialization gap. And that companies that get to a point where normally they would have been acquired, but they have assets now that farmers saying, we're not quite interested in those anymore. You can take them and fund them and commercialize them yourselves. VCs are saying, we don't want to keep putting all that money in. They stall. So there's now a second gap, and that's relevant to assets that really aren't quite that sexy or not quite that big of a market. For us, it might be a drop that instead of being 3 times a day, it's once a day, but it's not a big market. It's a $150 million market. You can get caught in that second gap, and so you have to think about that when you're just developing those kind of incrementally beneficial drops for small markets, for example.
Yeah, so I think all those comments are representative of the venture model. It is broken. There are different ways that these are being fixed, whether they're larger funds or different stages of investment, but I think that's just representative of that.